Well, hello everybody. Blair Nightingale here. It's Market Monday. It's time to go. Jumping in with a market update this week, which I'm glad has come back around because I was actually thinking as I was preparing for some of this today, we need a market update. We need a market update because this week is a big week for the markets. If you have never been here before, you're getting this recording, somebody sent this to you, you've been searching stock trading, whatever it is. I know we got some friends out there who've been with us lots, and a lot of you guys will be joining on the recording. This is Market Monday. We come here every Monday night so that we can look at some aspect of the market. We do it every week. We've been doing it now for about 2 years. You string all of these together, there's a lot of really important stock trading information that's in this program. Today, we're going to look at some things that are coming up this week. So if you are looking to trade, you are actively trading in the markets, you'll want to know these things coming up this week. Okay, this is really important stuff. We've just gone through a series on the market's falling. How far can it go? How far is this market going to go down? And then from there, when can I expect it to go back up? Right? We've been looking at that the last few sessions as well. You can always go back on YouTube and watch those if you missed anything. We've got friends here today from Facebook and YouTube. Appreciate you guys being on here. If you want to drop a comment, for me, it's right over here in the comment box. Let me know who you are, where you are, how you are doing, because I don't just want to talk. I want to connect with you guys. I love doing that. That's such a huge part of who we are here at TRADEway and what we do. We don't just talk stock market jargon and this and that. What we do is try to help people at any point of their financial journey understand the stock market better. When you understand it better, you can engage it with more confidence. When you engage it with more confidence, you can do better. That is what we have seen over and over and over again in the stock market working with our students. So we are glad to know that you are here. And as I said, if at any point you want to chime in, you want to say hello, you got a question about anything, you can pop it right in the comment box. If you are joining us on a recording, you can always comment right there on YouTube, right? My team will send that on over to me and I will answer that for you. Troy is joining us tonight. Troy is a Market Monday regular out in Houston, enjoying that heat wave. We talked about that now a couple weeks, but it hasn't changed yet. It's still the same. The market's been heating up a little bit too, Troy, right? That's what we're going to look at because, you know, what we're going to see is that we are in a bear market, right? But that doesn't mean it's going to go down every day. But when it starts to go back up, does that mean I should get back in? Right? If I took some long-term money out, if I'm protecting that, listen, let me tell you something we've talked about a lot here on Market Monday. I've told you that, I've seen people's retirement accounts that have lost significant amounts of money. Okay? So we come on here 20, 30 minutes every week, and I want to give you some really practical things to help you know how to navigate that so you don't have to stare at your 401k, you stare at your IRA, whatever, Roth IRA, there's so many different kinds, right? Whatever it is for you, or you're thinking about investing. I've been getting lots of texts from people. Hey, Blair, I'm not into investing yet, but I want to get into it. The market's down. Should I be getting back in here? Right? That's what we looked at the last couple of weeks. I want to give you some of that information. We're going to look at multiple things tonight. I want to show you some stocks. I want to show you the S&P. I want to show you a site I use in the season that we're in, especially this week, to know how to navigate my trading much more safely. It's one of the number one rules that we teach our students here at TRADEway. I'm going to tell you what that is tonight and how to navigate that. I also want to show you something that we do inside our program. It's what we call our TRADEway community pages. And I'm posting on there. Other coaches are posting on there every day. We're interacting with students there. I want to give you a peek into that tonight so you can see the content I posted this morning because it has a lot to do with our market update for tonight. Now, that said, Troy, Ken, lighten up the comments. Appreciate you guys. Ken, Thanks for being here tonight as well. I see some new people joining in as well. Hello, hello, hello to everybody out there. This is Market Monday. We are diving in. What's going on this week? This is really important stuff because people are making decisions right now, and I want you to know what some of these things are as you're making those decisions. Now, as I mentioned, I want to take you into the community pages, okay? Now, this is something that I posted this morning, okay? And you can see right across the top, the title, that's the big stuff this week, guys. Now, we don't trade based on news, okay? We don't trade based on news. We trade based on what the price is doing, the technicals. So you notice this chart here. We've looked at charts all the time here on Market Monday, okay? It actually broke out of that downtrend last week, right here, right? It broke out, it pulled back into the 50 and the 5-day moving average, right? This is what we call a flag pattern. It breaks out, pulls back. Now the day ended very flat, okay? It didn't do much today. And the reason is that even though we don't trade on news, there's a lot of news this week. And it's not small news. It's not just Wall Street noise. These are actually three pretty major things that are going to intersect this week. You and I don't need to understand all the ins and outs of these three news items, but we need to know what they are. And then we need to go back to the chart and say, okay, so if I was going to buy and sell stocks this week, how would I navigate that? And I want to give you some practical trading tools, right, that we talk about with our students before we close this session tonight. But first, let's take a second and look, what are these three things? Now, you can see them in my title here, but let's dive in a little bit deeper, okay? Fed, earnings, and GDP, right, all this week. Earnings is going to happen all week long. Now, this earnings season comes once every quarter, right? Every publicly traded company has to report earnings once a quarter, 4 quarters in the year, but it's spaced out, right? It's spaced out over the course of the earnings season. However, there's a crescendo, right? There's a peak. It gets more and more and more companies reporting every day, and then it starts to level off and come back down. Well, we're hitting a peak week, okay? About a third of the companies that are going to report earnings are going to report this week. And so this is a big week for earnings. And part of the reason it's a big week for earnings is because Wall Street is going, how much has this historic inflation that you and I have been paying for at the grocery store and at the pump, how much is that really going to affect how much money companies are making? Because if companies aren't making good money, well, then we're not going to invest in the stock market. And then you and I can expect it to go down even further. I wouldn't want to go out and buy a bunch of stocks if I felt like Wall Street did not feel very positive about the direction that the economy is going in. So they're paying attention to that. Now they're going to do all the heavy lifting. They're going to do all the math. You and I don't need to do that. We just need to know how they feel about earnings. And there's a lot of big earnings this week. I'm going to show you what those are right now. So in order to do that, I am going to set up another share here so that you can see this site right here. This is earningswhispers.com. Now, most charting software, and I'm going to show you charts by TRADEway in a second, will actually have the earnings date right on the chart. Now, I did this because we can show you a bunch of things in one shot here. And I use this site for a second set of confirmation, right? But it shows up on your charting software, okay? Any charting software worth its salt should have the earnings date right on the chart. You and I need to know when the earnings date is before we go trading a stock. If we're looking at long-term buy and hold, it's not going to matter as much, right? We're not going to get out every time that earnings pops up. But anytime we're trading, we need to know when earnings is because we're going to get out of earnings. We're going to get out of the stock before earnings comes up. Too much volatility, too unpredictable. We're going to get out of the stock. Okay? So if you look at this screen, look what's on deck here, right? We got Apple on the 28th. We got Amazon on the 28th. We got Google on the 26th. Microsoft, one of the biggest companies in the S&P 500, right? Most heavily weighted companies, right? UPS, Meta, okay, Meta's coming up. Some negative earnings in that industry last week, so definitely some fear as to whether or not that's going to do well. Shopify, Coca-Cola, big one. So even right there, now that's not all of them by any means. In fact, not even close, but that's quite a lineup, okay? So there's some big earnings reports. If you ever want to come in here, you can simply type in the ticker right there, okay? And let's say it was Netflix, which reported actually last week, okay? And then I could just click on that and up comes Netflix, right? Now the next one's further out because they just reported. So you could use this website. There's a calendar right here, right? Where we can look at what's coming tomorrow. You notice Wednesday has 97 companies before the market opens, 145 after, right? 148 before, 116. Friday, just one after the bell. So it's really going to climb and drop between now and the end of the week, okay? So there's a lot of companies, and not just a lot of companies, but a lot of big companies, right, are going to be reporting this week. So that's the first thing I want you to know, okay? That's the first thing I want you to understand. Now, the next thing we need to do, we need to go and actually look at the market. Let's go to this guy right here, okay? Now, let's go to the S&P 500. You'll see S&P 500 in a nice downtrend. Goes down, hits support, comes up to this previous support level, falls, tries, breaks out, right? Breaks out. So now we're trying to see, okay, is it going to pull back into the 50-day, which was a big deal, right? It hadn't been above the 50 in a long time. So you might say, well, let's get bullish on this thing, right? Let's buy some calls. Let's buy some stock. But you have to keep in mind that we're still in a bear market, and buying some of these bull runs without some of the tools I'm going to give you at the end of today's broadcast, right? Too quickly, some of that FOMO, fear of missing out on a big move, can get you into a move where you're only caught when it tanks, because there is a slant to the negative. There is fear that has control of the market. A little bit of optimism comes in and creates these big bull runs, these big moves that we even see right here, right? Creates a lot of optimism. Hey, maybe this bounce is going to be the bounce because stocks have been really battered and we might see it take off from here. Now, eventually that will happen. If you missed last week's episode and the episode before that, you'll know some of what I taught you on what to look for to have real confidence when that's going to happen. But we're going to see some of these bull runs in the meantime because stocks are really beat up. But if we don't get rid of the drivers for the fear, then it's a real slippery slope. And right now, even though we're above the 50-day moving average, it's still, in my opinion, a real slippery slope, okay, to go ahead and trade stocks, again, without some of the tools I'm going to give you at the end of this broadcast. It's not that we don't do anything in here, but we've got to add some things into the mix, right? If we're going to bake right now, we got to add the right things into the mix because otherwise it may not go so well, okay? So that's something that's really important. But we are above that 50-day and we're holding. Why? Because Wall Street is waiting to see what happens in these three things I'm telling you. That's exactly why the market was flat today. And I'll show you. In fact, I'm just going to show you this. I'll stop this. I'll come back to that chart, but I want to show you this really quick. Let's go back to here. Okay. Now, today's the third day at the 5-day and 50-day moving average, right? That's what I just talked about. Okay. Expect a higher possibility of a slow start to the week. Why? Because of the Fed meeting. Right? That's what we've typically seen on Monday and Tuesday as they await the report. Now, this was at about 9:10 this morning, right? 40 minutes after the market opened. The reason I was able to anticipate that, and it's not to say that this was a crystal ball or you'd have to be a genius to see that. I'm not stating that, but I am saying there was a high likelihood that the market would just be flat. And by the end of today, the market was flat. Why? Because we've seen it do that as the market's anticipating. What does that tell me and you as traders? It tells me that whatever we're doing, we ought to know that Wednesday, when that report comes out, the market is going to make a move that it didn't make on Monday and potentially not even tomorrow, right? We need to know that. Volatility can be good for the trader if you know how to take advantage of it, but it's not good for every strategy, okay? So we need to look at that closer with some of those tips I'm going to give you today at the end of the broadcast. However, today it told us the Fed's really important. Now, we've known that, right? We talk about that here on Market Monday. So Wednesday afternoon, you're going to get Fed earnings, Fed on Wednesday afternoon, okay? Now, I'll go back to the chart because we really want to look at stocks here. And I'll show you one more thing that's really important. Okay? Notice this. Let's reset that. Okay. Actually, you know what, guys? I'm going to do it like this instead because I want you to see what's happening and how important what I'm telling you about earnings is. So let me show you this because this is going to show you the after hours. Okay. Now, today, Walmart, big company, right? Big company. They reported earnings. This is the closing price right here, right? This is the current price. So Walmart reported earnings, big miss. They said what? They said inflation hurt the consumer and that hurt Walmart, right? That's pretty simple math, isn't it? The consumer had less to spend at Walmart and it didn't go as far, so they bought less. Well, they bought less, so we made less. Plus, we had to pay high fuel costs and we had to pay higher prices for things too. And then we had to pass that on to the consumer. So the consumer had less money to spend, plus we charged them more and we had to pay more. They're going to make a lot less money, right? That's what inflation does. That's why the Fed is so intent on getting rid of it. But if they're too aggressive, then they tip us into a recession. And this is why, with all those balls in the air, if I can put it that way, yeah, the market may find some hot moves, but it's a bit early to be saying, yeah, let's pile into this market, right? Now, here is a nice pattern. Boom, it breaks out, pulls into the moving averages, explodes. Here's a pull, a flag down into the moving averages, okay? But this guy is way down. Now, notice here on this software, it said earnings was August 16th. That's why I use earnings whispers as a second confirmation, because sometimes this isn't right. Sometimes they don't confirm this date. Okay, that's a reported date, but not a confirmed date. That's important for you to know. You might be in a trade. You need to know that. So I try to check two places because earnings, this is not a debate, right? This was today, right? That's why this is down 10% and it's down to those lows. Pretty darn close to the bottom there where it had been in June, okay, when things were really getting killed. So Walmart right back to where it started, okay? And you'll notice even a company like Target, well, that's pretty close. Hey, if Walmart's not doing well, Target, boom, goes right back to these previous highs. So it's creating volatility, right? The market is really watching the news and it's watching earnings. So we ought to do that as well on the stocks that we are looking at, okay? That's really important. So the Fed will report at 2 p.m., okay, on Wednesday. That's going to be the Fed report. Earnings is going to happen all week long, so we want to be very careful with that. And then if that wasn't enough, that's why this week we don't trade based on news here at TRADEway. We don't. We trade based on patterns, right? So when I go to this chart and I look at this guy, in fact, even this guy right here, right? Look at this pattern. Now that gold line, I didn't draw that gold line in front of you right now. I drew that gold line last week. And this is pulled down into support. It's literally sitting at support right now. Okay. That's what we look for. Patterns, peaks and valleys. Boom. Right. Those are the kinds of things we're looking for. So we trade based on the pattern, but there's just so much news right now that we are careful with that. Okay. Now, Thursday, this is another big one. A lot of people saying, are we going into a recession? Are we going into a recession or not? Well, there's a couple of different ways to measure whether or not we're really in a recession. Okay. But one of the ways is our GDP, our gross domestic product, essentially the value of everything we make in the country in a period of time. Okay. We get this report quarterly. The first quarter, okay, it declined. We made less, right? We made less than we did the previous quarter. So our economy actually shrank. But that's not a recession. Now, technically speaking, 2 in a row, right? 2 in a row, that is a recession. Now, there's no, higher court that officially declares a recession, okay, based on that. But it is bad news for the market, and they will be paying attention to that. Now, I'm going to give you my opinion. This is Blair's opinion, and I think the earnings season is really going to, it's really going to show the true colors here. I think there's a very high probability that we do see a decline, and that's going to be 8:30 a.m. on Thursday morning. So before the market opens, tons of earnings and this GDP. Okay, so that's going to be a big one there too. So if you were going, well, let's look at the S&P. It breaks out. It's pulled 1, 2, 3 days into the 50-day and the 5-day moving average. I'm getting ready. Okay, it's not that you can't have stocks ready, right? I'm just giving you this as a pattern example. If you had something and you go, all right, it's at support. I'm looking for some buyers. Okay, well, let's just make sure we're careful about the fact that some huge news items can create significant volatility, which means back and forth in the market. When we're buying stocks, when we're buying options, we don't really want back and forth. We don't want crazy movement, okay? We can use some tools I'm going to talk about in just a sec to minimize that, right? Because we don't, the old saying is when all we have is a hammer, everything looks like a nail, right? If all we know how to do is buy shares of stock, then we have to be very picky, we have to be very particular. Now, that's a good thing for a trader in general, okay? But we want to have multiple skill sets so we have some flexibility when the market is in a spot like this. When we're looking at the long term, I would just say there's a lot of question marks on the table, a lot of negativity. So I would highly caution against trying to load up or load back into the market heavily here because of those question marks, okay? But mostly I'm referring to the short-term possibilities that we're looking at here. Today flat, perhaps the same tomorrow. Now, sometimes Tuesday afternoon we get a little bit more of an emotional reaction because maybe that optimism or that fear wins out ahead of Wednesday. They're trying to position themselves. But if they really don't know, then it's just going to be flat. There's not going to be a whole lot of anything going on between now and Wednesday afternoon. But if that GDP declines more than they anticipated, like we had the inflation reading, which was higher, they knew it would probably go higher. They just didn't know it would go that much higher. If this declines, but declines more than they thought, we can expect the higher likelihood of a pretty decent drop at that point. I don't expect this level to hold at all, okay, if that's what happens. Now, on the opposite side, we don't know. Maybe it's bad, but not as bad as they thought. So we'll have to wait until Thursday. And that's the beauty of it, guys. We don't have to make a decision on something tomorrow morning at the open. We can wait for some of this to shake out, right? We can wait for some of this to play out. Josh says, I get the impression that it'll be a full point on Wednesday. So he's referring to whether or not the Fed is not going to raise interest rates 0.75, but actually 1 full point, 1 full percentage point. Okay. The Bank of Canada did about a week and a half ago now. I think they did a full percentage point, and they surprised the Canadian markets with that full point. We may see the same. They may choose to get more aggressive. There are some voices out there that are saying that we'll probably see the Fed get less aggressive. I would not agree with those voices. I don't see the argument for that. So what I'm telling you guys is, I think we definitely need to be prepared for volatility, but the possibility of a downside here is pretty high still. Okay, it definitely is still high. Okay, yeah, just a period that's the Josh here. I'll put this up for everybody else. It's just a period of slowing growth, not a recession. If you have that one contracting GDP, then you're seeing that, right? And remember that the Fed is trying to slow the growth, right? We say that every week on Market Monday. Okay, so a couple of things. What are some things that I keep alluding to this? What are some things that we talk to our students about all the time that we can be using in this environment to be safer if we are looking at taking some positions in our trading? Because there is money that can be made in these positions, right? It's not that there is nothing to be made, especially when there's volatility, because when you catch some of these moves, they can be very profitable. Okay, they can be, but they also carry that risk, because if they reverse on you, then you can easily give that money back. Or if you don't have a skill set that teaches you how to manage risk, then you're getting into the Wild West here, but you don't know what to do, and you don't know when to get out of the market if some of this news takes over, right? Let's say you're buying stock and we get some really bad news, maybe all three of these. Well, that stock's going to get buried pretty quick, most likely. So what do you do, right? That's the things we need to know. So a couple of things I want you guys to be aware of. If you're going to do something here, if you're going to buy some stock, right? Or even options. You're going to buy call options. You're going to buy puts. It actually doesn't matter to me what you guys are doing out there, right? There's so many different things we can do. Scale and position size, okay? Think about the fact that you can scale into a position, especially if you're doing some shares, right? It's really easy. You can scale into a position. You don't need to pick a certain amount of money and say, all right, that whole amount needs to go in at first entry, right? Remember, you have flexibility and control as a trader, and you don't have to do that, right? You could go, if I'm going to buy 100 shares of something, 10 shares, right? Depends on the stock price. Depends on your account size. Then you go, okay, I'm going to buy half of that, and then I'll scale in a quarter of that maybe, and then I'll scale in if it works, okay? That's a very easy tip, very easy way to do it. Break it up into pieces and look at scaling in. Now, remember, as you add, you have to know what's the risk of what my play is going to be when I add let's say another 25% in, okay? But we can easily add as it confirms the move. If it fails, all right, I put some risk on the table, but not as much. If it works, yeah, I'm not going to make as much because I didn't go all in on that, right? But that's part of how I stay in the game. So that's important, okay? I also can just look at, you know what, just trade smaller in general. Wow, this week Blair talked about all this news. Man, this is a lot of news. But I found a great pattern out there, and I'm going to take the trade, right? I'm good with this. I know my risk return. I'm going to take the trade, but I'm not putting that much money in this anyway. And that is how I manage my risk, trading in an environment like this, especially if I'm going to do something directionally, okay? So that's important. Now, this one's basic, but I got to say it. I already said check earnings, but have your stop outs in place, right? Know what the risk return is. So when I go in and I look at something like this, okay, just because this is a nice clean pattern, if I'm looking at placing a stop out below today's low, I see some green, right? I place it below today's low. Well, I have to calculate the risk on that. Okay. I have to know what's my stop before I ever trade it. If I don't know what I'm risking, there's a good chance that obviously financially, I'm taking risks where I haven't defined my risk. That's not good as a trader, right? I got to define the risk. Am I going to make money? If I make money, how much did I risk to make it, right? If this goes to 49 bucks from, let's say, 46, right? That's $3. But if I stop out at 44.30, that's a $1.70 risk for a $3 gain to the recent high. Okay, I'm starting to look at 2-to-1, close, not quite. That's not bad. It's not the best I've seen, but it's not bad, right? So I'm deciding that ahead of time. Okay, it's really important that I do that. That also is going to give you a sense of confidence and ownership over the play because you know you did your due diligence. And if it goes down, right, you know what to do because you already decided what to do. Okay. Now, another one is a little less obvious. You could just stay out of the market altogether this week, right? Choices: be watchful, take early profits, or take half. And that's definitely another one, right? I'm not looking for as far of a target. Notice how I just showed you on this chart, uptrends almost always retest the recent high, but we want them to break and make new highs. That's what uptrends do. So a conservative target on an uptrend, assuming the market continues here, is not a new high, but just to the previous high, which is what I just exemplified. So that's something else you could do, right? You don't expect these moves to last as long, especially when they're bullish moves in a bearish market. Now we've broken out of the downtrend. So there's a little bit more of an argument for some bearish moves, but in this week's environment, I'm not so sure, which is really what I'm trying to tell you tonight, right? Now, next week, a lot of this stuff is going to be washed out. Now you say, well, yeah, but I might miss something based on the volatility. Well, then you might say, all right, I still want to be a little bit more aggressive. I'm looking for plays, and maybe I'm looking to do something on Thursday or Friday, okay? Instead of trying to get ahead of it, you're taking on more potential return with some of that volatility, but you got to take on a lot more risk to do that. So you're using some of these tools I'm giving you, or you're just saying, hey, I'm staying out altogether right now, right? Now, the last thing I'll say is that you can learn to do some strategies that don't even require you to pick a direction, right? There are non-directional strategies, okay? There are plenty of option strategies out there that help you get into the market and actually use some of that volatility to your advantage, right? So the way we use options gives us flexibility where in stocks, you have to pick a direction. When you buy a call option and you buy a put option, you have to pick directions. You say, well, I guess that's technically 50-50, isn't it? Well, actually, it's not, because when you buy an option, you've got time value as well. So probability of profit actually drops below 50. Now, you can make a lot of money on directional options, and we use a system that helps us, as I just showed you, right? It helps us define edge based on patterns, okay? And some of these tips and tools I'm giving you, all of these things help us, right? But we don't always have to trade in a directional fashion, right? That's not always required. In fact, it's never required, but sometimes it's more appropriate to lean into that side of things than trying to do directionally all the time. And that's another thing. If I increase my skill set, then I increase the way I'm able to approach the market appropriately, depending on what's happening, okay? So those are some tips and tricks that you can use if you're looking to navigate. That's a pretty good update for this week, I think, to know what's on the horizon, what's some practical things I can look for in my homework as I'm looking through charts, make sure we're checking earnings. And those, it's not usually 3 big news items. That's not usually the case. This week, that's the case. So if you're looking to stay out, if you're looking to get in, if you're looking at some long-term money, right? What's the word I'm looking for here, guys? resist the urge to try and jump in on every bull run, okay? Because we need to see some of these things play out. And even though patience can sometimes mean we miss out on a little bit of the move, most of the time, in my experience, when we allow a fear of missing out to create activity in the market, it ends up being activity we could have done without. Okay. That would be my closing statements for tonight. Hey, Josh, Troy, Ken, everybody else who joined tonight, I appreciate you guys so much for coming on here, being with me. If you know anybody who needs to hear this, wants to watch, has not seen Market Monday, missed an episode, send them this link, share it with them, ring the bell. If you're on Facebook, like and subscribe on YouTube, because we will send you, we've got some new shows coming up, actually. Can't announce them tonight, but we do. We've got some new shows coming up. I think you guys are definitely going to want to see. So make sure you're following us here on YouTube and Facebook. We're not going to bombard you, but we are going to let you know we do a lot of broadcasts on here, and we don't want you to miss anything. So we'll just notify you when we're going live, and make sure that you get that information, because, hey, what you know can help you. And that's what we are here to do. Ken, appreciate you. Troy, thank you so much. I am going to be back next week, and we got some new shows coming up. So I hope you guys will stick around. Thanks, guys, and have yourself an awesome night.